Hello and welcome to News You Can Use. I'm Lisa and I'm here to discuss the relevant personal finance headlines from last week and how they impact your money life. So the first one I have here says MF's double equity investments unfazed by geopolitical worries. The geopolitical worries, of course, are Russia's armed offensive against Ukraine. And the real worry is how, at least at the start of the week, was how it's impacting crude oil prices. And the article seems to suggest that mutual funds are not really worried about this and they're investing despite that. But that's not the case. The fact is that mutual funds get a lot of inflows on a regular basis thanks to systematic investment plans that investors make, because they are investing regardless of what is happening around them. So when prices fall, this is a good time for mutual fund houses to actually use that cash to buy stocks they like at a cheaper price. And that's what's happening. It doesn't mean that they're unfazed by the geopolitical worries. The worries were quite active at the start of last week. Of course, that changed, but nevertheless, can be a little misleading. It just means that they have money to deploy and they're doing it when prices fall. Okay, women start availing more home and auto loans. On the face of it, this headline sounds encouraging. It means that women are getting more financially independent and making money decisions and money choices on their own, which might be the case. However, understand that a loan is not necessarily a sign of financial independence. It could also be a sign of financial stress. The Credit Information Bureau quoted here says that there was a 42% spike in female borrowers for personal loans. Now, if you are taking a business loan, then you're putting it in a business which could generate cash and you can use that to repay your loans. But personal loans are usually taken for expenses and you don't really get a return from that, and hence the interest payment could become a burden. So, watch out for this. Don't take it as a sign that, things are good. It may also be a sign that there is increasing stress among women in the economy. The article doesn't go on to suggest anything like this. I'm just saying that a higher uptick in loans doesn't necessarily mean that something good is going on in the financial independence domain. So just be a bit careful. Okay, motor insurance premiums to rise steepest for two-wheelers. So I think there is motor insurance premiums. Motor insurance is something which is mandatory for vehicles on our roads. It means that you have to take third-party insurance when you buy a vehicle, be it a two-wheeler or a four-wheeler. If the premiums rise, and this article says they can rise between 5% to, or at least the insurance regulator has suggested a 5 to 21% increase, and the highest increase is coming in a certain category of two-wheelers, the highest increase being 21%. So if you're paying, say, 1,000 rupees for your two-wheeler insurance or 500 rupees for your two-wheeler insurance, it goes up by 21%, which makes it around 605 rupees from a 500 rupee jump, or I think 1,110 rupees, 1,210 rupees for a 1,000 rupee premium. So watch out. Fuel prices are already high. Now you'll have to pay more for insurance. So be very mindful when you're buying that new car or that new two-wheeler that these are incidental costs that you can't do away with. Okay, so the next headline is about the rupee. Street fears rupee could plunge below 80 a dollar. Plunge below 80 a dollar means that in absolute terms, it can, a dollar can be worth more than 80 rupees. This is scary. Towards the start of the week, again, what had happened is that the rupee touched around 77 to a dollar, which is quite a steep fall for rupee's purchasing power. And it's really not good because we import a lot, especially our oil requirements. We import 70 to 75% of our oil requirements. And if your rupee against the dollar is weakening, then the import cost goes up. If the cost goes up, as you know, inflation goes up. And oil is the foundation of a lot in the economy. Hence, if oil prices go up, it's a definite that inflation will go up. And that is what was spooking equity markets as well at the start of this week. Thankfully, rupee did not cross any of these scary barriers, and it's back at slightly over 76 to a dollar. But yeah, I mean, this is a worry, the way the rupee has moved. RBI has managed to contain the fall, but let's see what happens. I mean, for now, it seems that the war may not continue and that may cool off crude oil prices, which we are seeing happen now. But one doesn't know, how the story unfolds in the next few weeks. Okay, JP Morgan, ICICI Securities to deliver Swiggy IPO. We all know Swiggy, we all order food on Swiggy. And one gets excited to see the IPO of a company which is so inherent in our daily lives. However, and the headlines also talk about things like $3.3 billion valuation and all these kind of rosy things that come up. However, be mindful. Recently Zomato listed, I think last year sometime, and it's down like 35 to 40%, I think, from its original listing price. And while these are popular businesses because we use them because they are digital and they have made a big impact in our lives, doesn't automatically mean that the share or the IPO is going to be a huge success as well. Maybe a huge success on listing, but over the weeks, as we have seen for a lot of these digital fintech app-based IPOs, things have gone south. So the headlines makes it sound exciting, but don't get overwhelmed by these things, and don't have to always invest in every IPO. Okay, the last headline I have is extremely important for retail investors, especially those who invest in individual stocks on their own or on the recommendation of the several influencers who are out there. So pump and dump schemes on D Street go the digital way. So pump and dump is what? Pump and dump is when a certain group of people who are well entrenched in the stock markets, and earlier it used to be some brokers and traders, they pick one stock and they decide that they will create a lot of positive noise around this stock and get a lot of people to buy it. These are usually penny stocks at less than 20 rupee kind of price available. So people think that, okay, it's just a little bit, so let me put in some money, and they garner lots of investors like that to put in some money, and hence the stock price starts going up just on hearsay. No real fundamental value, just on hearsay, and because people are building up this excitement around the stock. And when it reaches a point where these traders and brokers decide that this is good enough profit, and they have already bought it before all these other people got into it, they start selling. And they sell in huge lots because they are the ones who have bought all these small lots from retail investors. They sell in huge lots. The stock starts hitting circuit, and the smaller investors get stuck and they can't exit the stock till price has crashed. Okay, so these are pump and dump schemes. They used to happen always, but when it's not digital, only a handful of people, it reaches only a handful of people. This time what has happened, there's a company which got highly talked about on social media, on Twitter particularly. This is a company called Salazar Techno, as per the article, and lot of very popular stock market traders, influencers, analysts started talking about buying this stock. It later came out that many others were approached to promote this stock for a fee of 25 to 30,000 rupees. And when other influencers started saying that, look, we were also approached but we didn't, then things turned sour, and those traders who initially did deleted their tweets. But those are traders who had thousands and thousands of followers. So if some of those followers fell for it, it was good enough for that company's stock price to really go up. But these are schemes. When it's in the digital domain now, it'll be hard to track who is pumping up a stock. And if you're an investor who buys individual stocks, you need to do your research and you need to be careful, especially when investing in names that you haven't heard of, companies that are not popular, small companies in some town. They could be good, but you have to do your own research. Do not rely on what influencers are saying. As we are reading, this opinion can be bought very easily. So do your own research and only then invest in individual stocks. Thank you for watching. Stay tuned for news you can use next week as well.